The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the November 6th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with some empowering beliefs. You know, the measure of a person is not determined by their show of outward strength or the volume of their voice or the thunder of their action. It is to be seen rather in terms of the strength of one's inner self, in terms of the nature and depth of our commitments, the sincerity of our purpose, and our willingness to continue growing up. Our minds are so cluttered with everyday living, and we don't or won't take the time out for a little prayer, or maybe stated as mental cleansing. But just as we bathe every day to cleanse our physical body, our outer shell, we too must cleanse our inner self. Folks, let's be reminded that we are not put here on earth to fool around. There is work to be done. There are responsibilities to be met. Humanity needs the abilities of every man, woman, and child. You know, nobody can really guarantee the future. The best we can do is size up the chances, calculate the risks, estimate our ability to deal with them, and then make our plans with confidence. Of course, I say, take massive action. Well, let's go size up these markets out here. Right now, we've got the Dow is trading up 20 points, S&P down about 2, NASDAQ off 18 points, Russell 2000 down a point, NASDAQ 100 off 19 points, New York Stock Exchange, that is down. Is that the leader in the clubhouse? No, we got the NASDAQ 100. That's leading the charge on the way down there. That's never a good thing. Not in the bullish market, that isn't. New York Stock Exchange, nonetheless, 318 net declining issues, trading off about 23 points out here. Goldilocks down $9 right now. Silver off 18 cents. Light sweet crude off 73 cents. Our call-in number is 877-927-6648. Interestingly enough, over the pond, across the pond here, the FTSE is down 18 points. The DAX is up 65. It was all red across the board in the three major Asian markets that we pay attention to, the Nikkei, the Hang Seng, and the Shanghai. Before I go into the markets here, I had a caller on the during the last hour. I wasn't able to really get to the complete aspect. He was talking about Zillow. It was Lewis from Boston out there, and I just want to go back over this chart here real quickly because I know that Lewis was taking a look at a entry point on Zillow. So if you are watching us on Tiger TV, thanks so much for doing that, because you can see our charts. If you're listening on your mobile device at tfnn.mobi or a radio, thank you so much for doing that. Remember, you can catch live stream of the show by going to the homepage of tfnn.com. Over on the right-hand side, you'll see a button. You'll see three little smartphone devices. Click on that. The show will stream live to it, and you'll be able to see the chart here. Now, we're taking a look at Zillow, and one of the things that Lewis was looking at, I'm going to get rid of the moving averages at this time out here. So let me just get rid of that. We'll clean that off of the chart here, just a couple of clicks away. One of the things that Lewis was looking at was this little gap out here. The gap here, which had been tested once. That was the gap from August the 1st. I'll go ahead and draw a black line across my screen out there. Gaps are our friends for sure. Now, that was a breakout session. Nice wide-ranging bar, but not any kind of wide-ranging volume out there. Only 1.4 million shares. Nonetheless, Zillow did pull back into that with 1.5 million shares, and that area held. So that says, okay, maybe that's a strong area of support. Still coming back with too much volume. Then yesterday, we saw a complete key reversal type session. Now, I don't pay attention to yesterday's bar as a key reversal. I call it an outside day for sure, but not a key reversal because the market was not overbought, oversold at all. But what we did see yesterday was we saw price push lower with volume. The volume there was 4.3 million shares moving into the breakout session that took place on August 1st. It only had 1.3 million shares. Today, you are trading down below that area of support. That says your next level of support would be the top of the gap. That would be the high of the July 31st session. However, what's more important, because of a lack of volume there, is to start taking a look at a chart and see where else is it that you've got volume below out here. And there are a number of other real breakout areas. This breakout area right here is the one that I would be paying attention to. There we had some wide price spread accelerated volume, that being February 14th, 2013. The high of which is about 47 bucks out there, the low $42. Now, what we're going to learn about Zillow here today is it looks like it's going to be confirming an A to B equals CD down pattern. The A point is the high that it made with 1 million shares, a little over 1 million shares. That was on September 19th out there, and that high was 102.80. The B point is the swing point from October the 9th, 75.55 out there. Now, what we can see here from a retracement standpoint, if we go and take a look at our B to C retracement out there, probably a 50% retracement. Because it never closed above the 0.382, I'll give it a 0.382 retracement. Take a look at the way Zillow has now moved off of the C point out here. What this says, Lewis, and what this says to everybody else is 61.39, which is your 1-to-1 A to B equals CD. That is not where the price will stop. Zillow will go lower. Now, the question is that going to be the 54.04? Is that going to be the 44 area? And I suspect that 44 is really where you want to be paying attention and taking a look at this. That's where we see a breakout with wide price spread, accelerated volume. It looks to me at this stage, as we speak right now, that that's where Zillow wants to run to. So, Lewis in Boston, if you're still listening, thanks so much for calling. And this is, I think you got to keep your hands in your pockets here when it comes to Zillow. Z is the ticker symbol, not to be confused with our Z inside of the Tiger's Den. Now, let's go check out these markets, see what they are doing out here. This morning, we saw Super Mario come out, reduce the short-term interest rates by 1/4 point out there. Of course, if you were up in the den, I immediately posted that this was a false breakout. That this was absolutely a false breakout as I watched futures skyrocket higher. And then, of course, I paid attention to my barometer of the currency pair marketplace, and that is the Euro-Japanese yen. And if we go take a look at that, let's go see what it is doing here at the moment. That was moving substantially lower, while our markets were screaming higher out here. And you can see this was the move lower inside the yen during, this is a 30-minute chart during that 8 o'clock session. Of course, it's not so much the intraday chart that was of interest to me. It's really this chart, which is the daily chart. And when we take a look at the daily chart here, where is it? The Euro-Japanese yen out here. The key is going to be, is this thing going to go ahead and close below the 0.382 retracement level? Because it has a very valid sell pattern out here that has two sell signals. Those two sell signals being the bearish engulfing candles each time price tried to break above the 1.618 butterfly sell pattern. The first one was on October 23rd. Nice bearish engulfing candle. The next one was out here on October 31st. We've seen that first move down into the 0.382 level. There are some bears trying to hold it up right here, but it looks like what we will see out here. And yes, yesterday was a bullish engulfing candle, but totally erased as of the moment here. And that means it basically has no meaning to us. And that says that price will then move down to the 130.83 level. But I suspect it'll move down lower than that. But that is the real target on here, and we'll assess things as that occurs out here during the first hour. If you didn't catch it, go check out the archive of today's workshop, because in that case there, we took a look at this currency pair. We took a look at divergence sets out there. If you want to help your trading understand whether moves in markets are real or not out there, go listen to that first archive. That is on Channel 9 out here. Now, let's go take a look at the indexes. Let's go see what it is that we have coming on, what we have going on out here. First, we'll start off with the NYSE. Down 32 points right now. Net declining issues, minus 604. This is going to be a market that's going to push lower out here. And we could see some big pushes out here. The bears certainly have control of the ball. Now, price-wise, we haven't seen much in the way of any kind of erosion out here. But the New York Stock Exchange has been screaming that the bears have control. Now, it's been a tug of war here, getting up and over and below the zero line of the both the volume and the price oscillators out here. But we do have that nice three drive to a top pattern inside the New York Stock Exchange. Says that price wants to pull back. And that pullback, I suspect what we're going to see is a 0.618 retracement. I think we'll get down. We'll test the 0.618 retracement. That's the May 22nd high. That's where we'll get a release of information to us. That high in the NYSE is 96.9546 out there. I suspect that what we're going to see is prices move down into the November 15th, November 17th area. Why do I say that? Hey, that's a great question out here. Well, there's cycles everywhere. Always cycles. And if we take a look at the cycles that are present right now between highs, and we take a look at cycles between lows inside of the New York Stock Exchange, you'll take a look at these little red cupped areas here. Those are just simply marking the highs out here. That's what really set up the nice 3 drive to a top pattern out here. It completed 1 day earlier, so that's okay by me out here. If we take a look at lows, those are the black little circles, half moons out here, and you've got about a 27-day cycle out here. Normal cycles are between 18 to 22 days, but sometimes they stretch a bit. What you want to understand is just simply when you're coming into cycles out here, and if this maintains this same area, November 15th is what it calls for. Well, I believe that's a Friday. Maybe it's a Saturday out there. I believe November 17th is the next full moon cycle out there. Full moons usually have positive impacts in the marketplace, and so it looks to me like that's what we'll see. We'll see a market that'll move down into that time frame, and of course what we'll do is we'll measure, if in fact that's the way that things roll out here, we'll measure where price is moving down to as it's coming into that May 22nd swing point high. That's on the New York Stock Exchange. The bears exerting their control of the markets today. That was a little bit of a divergence yesterday, was that you saw the Dow, bolster up, try to break out above its consolidation area out there. But the wider swath of the market was saying, I don't think so. Have fun, you 30 stocks out there, but I don't think so. In case, in the S&P 500 here, still no real wide price spread or anything. What we saw here today is wasn't able to get up and actually test yet the high from October 30th. That's your bearish engulfing. That's your key reversal session. That is a key reversal session. The market was in an overbought status at that stage. The high is 1775.22. That is your resistance area. You get to close above that today, and then the market would be sending us a different signal out here, but otherwise not the case. We take a look here at the Dow. The Dow has broken or did break above the consolidation area. Now, what I do have out here on the Dow, normally I take a look at just simply horizontal areas of resistance. Now, interestingly enough, inside the Dow, that did break the consolidation pattern, the 1,000-point consolidation pattern. On the actual cash index, though, what I have done is just taken a look at a quick trend line. So we use channel lines, which I'm using co-located, opens and closes. If we take a look at trend lines, I'm using the high for May 22nd. So if you're watching us on Tiger TV, we just talked about the May 22nd level inside the NYSE. That was a key reversal session, by the way, inside of the Dow. I'm using that high, and then my next touch point is really the high that came in on August 2nd. What you'll see is as the Dow was pushing up this morning, it was trying to get up to the top of that trend line out there. I do believe that's the extent of the move, folks, inside the Dow. And now we'll see a pullback, 15,100, maybe all the way down to the bottom of that 1,000-point consolidation range. We'll be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow down about 9 right now. S&P off about 7. NASDAQ Composite down 37. And I've got the ES Mini 30-minute chart up on my screen here. Let's go see what we can learn from this stock chart. Number one, we're paying attention to the 25-point consolidation range that it has been traveling in ever since about the October 25th time frame, about 9 o'clock in the morning or so. Nice big consolidation range. The initial response inside of the futures market, which was certainly a false response out there as we took a look at the currency pair, the Euro-Japanese yen, was a move higher. Now, they were able to push the futures up into the top of the consolidation box. Of course, when it got up there, a couple of things took place. Number one, it moved on that intraday chart. It moved it right into the extreme oversold territory, just using the 14-period relative strength. There's other tools that you can use out there. And that said, okay, you're coming into a resistance area. You're into the oversold level out there. Probably going to be a little bit of a pause. So now let's see what the market does out here. Well, what it did was on that very next bar out there, formed a doji. That was at the 8:30 session. I'll go ahead and blow this up on my screen for you. Now, dojis have a ton of meaning at resistance areas. If you use these just for resistance, folks, your trading will improve so much out there. So now at a resistance area, which was the sideways consolidation box, which had been drawn in, days ago, you already knew where your areas of support and resistance are. You get a doji. Doji candle basically means, hey, you know what? The buyers have vanished out there, and that's why dojis have so much more meaning at highs versus lows out here, because it's telling you that, guess what? In that half-hour session, as you came into resistance, the buyers dried up. Now, the next move is going to be, are we going to see a close above or below that? That sets up resistance. Now, resistance in this case here is not the doji. It's the candle before it. It's the high of those two sessions. In this case here, the real resistance area becomes the 1774.50 area. Well, we had some leaves fall off the tree. What do I mean by that? We saw a lower close on that 8:30 session. Now, what we have seen, let's go measure what we've seen here so far. Let's go from the most recent low to the current high that was put out here at 8 o'clock this morning. Let's go see what kind of retracement. There we are, right at 0.618. So price moves down to 1759.67, makes a 0.618 retracement. That's a normal spot to let folks off of the elevator, to let some folks bag some gains out there, adjust their stops, whatever it is that they might do. You're also starting to move down towards an area of being oversold. Not just quite there just yet, so 1755, not out of the cards here. But what price has done, now we're still in that 30-minute bar. It is right now 10:27, so we got 3 more minutes left inside this bar here before it gives us any type of clue. And that clue that I'm paying attention to is 1763.50. I think ultimately what we will see here is we'll see it push lower during the day. We'll see this get into a little bit more of a oversold condition. Then we'll see a first bounce. That first bounce should take us up in that 1763.50 area. That's what we want to be watching, because if price can't break back above that, that will all of a sudden, we'll likely be setting up the B to a C and A to B equals CD down. If it can't get back above 1763.50, that is the perigee lunar phase that came in, was probably about 4:20 in the morning yesterday. So I believe it was 4:20 or so in the morning yesterday. That's a very important level to be paying attention to. So the next level, though, that we want to really watch out here is going to be a break to the downside, whether or not the consolidation of the downside can be broken. No certainty that it will. We know where the lines of demarcation are set up, and that's the beautiful thing about trading. Now, trading consolidations, they can be tricky. It's easier for most to just simply trade the breakout, whether it be to the upside or to the downside, because the likely move is going to be equal to or greater than out there. So that's what the 30-minute chart here for the ES Mini is telling us about the markets as we speak. What did we only took a look at the S&P 500. Let's go take, and the Dow. Let's go take a look at the Russell 2000. Let's go see what the Russell 2000 is doing. The Russell 2000 actually probably the weakest of all of the indexes out here. The Russell 2000 has had some. We'll go take a look at the IWM. Right now, the Russell is taking on its B point of an A to B equals CD down. Looks like that is really the pattern that is underway here right now. That will take the Russell down into the 1073. 1064 is really where it likely will travel to before it releases information. That is going to be the breakout of its August 5th swing point high out there. So we'll see. And that's also right around the 0.618 retracement, where it would be setting up a Gertley buy pattern out there. But we really have to pay attention to volume as that move is made. If we take a look at a 1.618 expansion. So there's a nice Gertley buy pattern that is inside the Russell 2000. I'll show you what that looks like real quickly here before we go off of the air. You're going to see a nice A to B equals CD and a 1.618 expansion. And if that area fails, that will be communicating a ton to us. That is on the Russell 2000. Right now, Dow down 10 points. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Right now, Dow's off 30 points out here. The S&P is down 9. So after, let's see if Twitter here has actually opened. Let me switch over to a different spot. No, I don't see it having opened here just yet. So what's going to be the big news today? The Twitter open, or the mere fact that we saw a 200-point move or so inside of the Dow? What I mean by that is if we go take a look at the actual futures out here, what would that take inside the Dow? So we had the Dow trade as high as 15,779 out there. Right now you're at 15,662. So we're already off 100 points from the high out there. Another 100 points, that would be no big deal to the downside, a couple 100-point move out there. So in any event, let's go back, take a look at the composite. Let's take a look at the NDX 100 out here. Composite finally doing something out here, and that's been really traveling with some small ranged bodies in the upper portion of the consolidation area, which really looks more like distribution. And now it's going to be coming down and testing its last sign of strength out here, which was the gap up from October 17th to the 18th out there. In order to go ahead and close and repair that window, you'd need to see it close today below 38.63 out there. Close below that. That'll set up a move back to the highs out here from August the 5th. August the secondary right around the 36.94 range. Inside the NDX 100. NDX 100 now also as well breaking. Now its first stop is going to be also that gap from the 17th to the 18th out here. Right now it's trading at 33.44, so 33.21 to 33.0 to 33.01 is really its next target range out here. That's inside of the NDX. Let's go take a look at the ETF structure out here. ETF, we will probably see another key reversal, bearish engulfing session today. That ought to mark the high inside the Dow Diamonds. If you see it close below give me a second here, 156.49, that will give you your bearish engulfing candle. But if at any point in time during the day it trades below 156.37, you're 156.83 right now, as long as the candle is red on that, that would be a key reversal. That would be your second key reversal session with inside of the Dow within the last 5 or 6 days. That's got to have some meaning out there, folks, with regard to who's got control of the marketplace. So that's what's going on inside the Dow Diamonds. That would set up the move down rather quickly, probably down to about the 146 level again. If we took a look at the cycle. So today's November 7th. I said it was November 15th out here, and so that says next week. All right, so you got November 15th on the cycle day. That comes in on Friday, so it says next Friday is when we ought to see a nice little low out there, maybe a scary low. That would be a low that we'd want to buy, just like this high here is the one that you want to sell into the marketplace out there. And then you've got your full moon coming in. I believe it was on the 17th on the Sunday out there. So that would just be the logic out here. Probably what that does is it pushes the Dow down to the bottom of this consolidation range out here. But we'll take things one day at a time, one moment at a time. Let's go take a look at the Qs, see what kind of volume we've got in the Qs. I mentioned this the other day. If you didn't pick up on it, the Qs have the Qs have a habit of, you can use volume differently on the Qs. That's really what it is that I'm trying to tell you out here. Different than any of the other ETF structures. Now, this is for me going back and taking a look at high volume bars, high volume lows, and low volume highs out there inside of the Qs. Now, I haven't figured out the reason why. I don't know what the fundamental reason is that is behind it. To a certain extent, I really don't care. But when the Qs have these big, real high volume lows out here, they actually can lead to buying points. It's like an exhaustion move down. The last one took place here on October the 9th with the move down of 64 million shares. What gave it away then was that very next session here when it actually went ahead and gapped up. And when you start taking a look at these high volume moves down, August 27th, you saw, fairly decent high volume low down here. But really, you saw this one right here. It took place June 20th. It took 2 more days out here for that exhaustion to really wear off in the marketplace. But be paying attention. Don't fear some of the high volume lows that you actually see in the Qs. They tend to lead more towards buying opportunities than they actually do selling opportunities. Now, it may take a day or two out there, just like just like low volume highs out here. And that's what we saw take place right here on November the 4th. The volume out there was only 16 million shares up at that high. You can see so far that meant that 2 days, 3 days later, now today, we're seeing some volume inside the Qs already, 15 million shares. That's compared to that high volume, that low volume high. I'll get it right for you. That low volume high of only 16 million shares on November 4th. We've only been trading for an hour and 9 minutes out there. So that is telling you that we're now starting to see volume pick up to the downside inside what has been and still is one of the strongest indexes in the ETFs out there. Now let's look at the IWM. This one here actually at the moment is the weakest of them all. This is confirming an A to B equals CD down. It is the B point on here of the small A to B equals CD. That is 107.92, 117 million shares. Now, that's a high-volume bar out there. Don't know if there was a rebalancing that took place inside of the IWM, but that low is going to be tackled here. So it doesn't look like we'll get a confirmed A to B equals CD down volume-wise, 16 million shares. Well, hey, anything can happen. Only an hour of trading, 16 million times 6.5 hours. Still not going to get you to 117 million shares, and volume usually doesn't keep up at this pace out here. But nonetheless, you're going to get it closed. Looks like you'll get it closed below the swing point low from November the 1st out there. That says 106.29 is a game out here, but I suspect with the Russell 2000 actually now leading the charge on the way down, that says what we'll see is the Russell move down to the October 9th area. That is in the price range of about 103 to 104.36 out there. Let's finish this off and take a look at the SPY. Take a look at the S&P 500. What you've got today already is a key reversal session. So the SPYs now have given you 2 key reversal sessions at highs. The first one was on October 30th, bearish engulfing key reversal session. You got the same thing today. Now, as long as the SPY finishes red, you'll have a key reversal session. Doesn't even matter if it closes up towards its high out there. So you got 2 key reversal sessions out here. That's a pretty significant sign of something that seems to be more ominous, more bearish than bullish. That is for sure. Now, if those areas get taken out, boy, that tells you some major strength inside of the marketplace. But at this stage here, these signals that we are seeing here inside of these SPYs are giving you signals that the market wants to at least pull back and retrace. So big message coming from the SPY. Let me go back over and take a look at the S&P 500 cash. And did we get a close above yesterday? Our high, let's see, 1773, 74. Yeah. So you got the same pattern going on inside of the S&P 500 index with regard to key reversal sessions out here. 1, 2, 3, 4, 5. Only 5 days elapsed in between each of those out there. Let's go look and see what's going on inside of the ETF structure, the sectors within inside the S&P 500. Let's go take a look and see what we have out here. XLK, let's start with the XLK. That giving you a key reversal, potential key reversal session today. Just needs to go ahead and close red. And what I mean by that, folks, is a key reversal session requires 3 elements. Number 1, you've got the market needs to be in an extended condition. How are you going to determine extended conditions? You know, you can do it by A to B equals CD patterns. That's certainly one way. We take a look at the XLK, your A point, June 24th, your B point. That you could use out here would be August 14th, your C point down here. You can see a 1-to-1. There's a couple of A to B equals CD patterns that are out here, but that's really the best one that is in place out there. So that would be one way. Another way, just taking a look at your 14-period relative strength indicator, your RSI. You can see that takes us into an overbought condition. That's a beautiful way to be able to do that. So that says here, that's your first element. You've got to have a market that is in extended condition. Number 2, the market just simply needs to trade above and below intraday the previous day's high and low. Well, we can see here inside of the XLK, it's accomplished that. Yesterday's high, 34.04. Today so far, the high, 34.10. Yesterday's low, 33.83. So far, intra-session, 33.79. You've accomplished the second item here. Number 3, all you need for a key reversal session is, in fact, a red candle, a lower close, a close in the opposite direction of where that trend was coming from. So key reversal sessions, they are important to pay attention to, both from the standpoint of setting up some resistance areas to take the other side of the trade, because if these patterns here fail, they tell you strong momentum is underway inside of the marketplace. So the XLK doesn't make sense, right? We saw the S&P, we saw the SPY showing a key reversal session. It would only make sense that your number 1 sector inside of the S&P 500 would also show the same pattern. That is the XLK. Number 2 weighting structure, it's either the financials or the healthcare sector. Let's just look at the financial sector as it is right now. That is trading a bit lower here. That is, now this would not be a key reversal session here at all. So far it's trading out at $20.59. Volume is 11 million shares. This is trading into a swing point here that only has 25 million shares, though. That is from the trading session of November 5th. That could be your B point of an A to B equals CD down, the small one, and we would go ahead and take a look at that. You've got 2 that I can see on my screen here, but let's take a look at the small one. And that small one would give, say, about 2014, 1999, and that would be really coming into the breakout session of October the 10th out here. It seems more likely that is what the XLF is signaling to us out here. Let's go take a look at the XLV. Let's look at the healthcare sector. Let's go see what it is doing out here. That is the either number 2 or number 3 waiting out here. That is just traveling sideways here. Hasn't really broken its consolidation. So far, today's volume as it pushes lower, 1.9 million shares, moving into about 6.8 million shares. So volume picking up as this is moving lower, but not really. This had a key reversal session right here. That was on October 30th. So that says, okay, time out, time to take a rest, time to at least come back into the area where it last broke out. you would think, or come back into the last area of old resistance. That would be August 1st high, about 51.50 out there. That's on the XLV. Now let's take a look at the energy sector out here. Let's see what we have inside the energy sector. Pushing lower. Let's see if we got volume picking up inside of the energy sector out here. So far today, it's seen volume of 6 million shares going against a set of swing points out here. 12 million shares on November 1st, 16 million shares on 7 million shares on October 24th out here. So it is pushing lower with volume. Looks like the XLE wants to at least move down into that rising price channel. I suspect we'll see the XLE. Did I say that? If I didn't, I did know. The XLE probably wants to go in, move down into the 83.72, 82.66-ish range. It's traveling at 85.81 right now. Let's take a look at let's see, I'm just looking here, scanning real quick. The consumer staples area, the XLP out here. Let's see what kind of day it is having. High yesterday, 43.08. The high today, 43.08. So just a little bearish engulfing candle. But that really set up this resistance out here. You did have a key reversal on October 30th. That says that the first test here for the XLP would be the top of, sort of the top of this consolidation. I would say the first target here is going to be the October 28th-ish level, right around 42.14 out there. Let's see, we haven't... Just trying to remember what we've taken a look at, what we haven't taken a look at this hour. We haven't taken a look at is any of these stocks here that are moving to the upside or to the downside. Let's go take a look at some things moving to the upside out here. You've got Heartware International. That's up 13%. That's the leader in the clubhouse. HTWR is the ticker symbol. They had a nice $11.3 million loss versus 24.98. And these guys are doing a good job of spending money. Net revenues $54 million versus 22, so you got some top-line growth there. You also have some bottom-line, well, not really growth. I guess you could say it's reducing its losses out here. But let's go see what the stock itself is doing. HTWR, very first time I've taken a look at this equity. No, I guess it's not. How about that? There's an A to B equals CD. There's an area of support that it had broken through. So this thing here, gapping up this morning. Volume in this is 412,000 shares. Not the most liquid of instruments out here. Looks like it completed an A to B equals CD pattern to the upside. This thing here is a little psycho. A lot of gaps. What do these guys do? Heartware International. Let me see what these guys actually do. They are a medical device company engaged in developing, manufacturing miniaturized implantable heart pumps and ventricular assist devices, VADs as they call them. Boy, the heartbeat on this thing has been all over the place. Look at all of the gaps on this. Must be really news-driven out here. I am not sure how you would trade an equity like this that is just so totally news-oriented out here. Right now, the trend in this thing here, again, HTWR. Let me switch over to a different system out here. And, sometimes, folks, you look at a stock chart and you just say, I don't know. I don't see any pattern I could tell you to trade out here. That's in hardware. When we get back, we're going to go take a look at some other stocks here that are moving in the marketplace. You got Solera Holdings up 13%, Priceline down $22. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. They are tweeting around the world. Twitter finally opening here, doing it right as we came in at 10:50 out here. The opening price was $45.10. It's trading up a bit right now, trading out at 46.76 out here. I've got the 1-minute chart on my screen. That first minute, we saw 13.5 million shares being exchanged. No idea where this thing is going to trade up to. And we'll certainly be paying attention to it out here. The question is, the high so far during that 1-minute trading session came in at $48.15 out there. So those folks, a couple of those folks already in the red out here. So, okay, congratulations to the shareholders that were able to push this thing out and do it on a day when it was in conjunction with Super Mario out there reducing their key interest rate, short-term interest rate, by 0.25%, and then our market reacting the wrong way out there, meaning pushing up when the correlation of currency pairs out there was saying not so fast out there. In any event, I'm sure Basil and all of us here at TFNN will occasionally check in on Twitter. Ticker symbol here is TWTR. That's the 1-minute chart that you're looking at on my screen. But let's go take a look at let's take a look at the day, what it is that you need to be focused on and paying attention to, in my opinion. Number one, we're going to go over and take a look at the VIX index here. It's trading up a bit this morning, about 5%, I think, last time I looked here. Let's see, it's up 62 cents, trading out at 13.29. Now, the real key here is what's going to happen if, in fact, it moves up to that 50-day exponential moving average. Right now, that level is at $14.50 out here. It's another $1.20. If it gets up and closes above the 50-day moving average, that's where you see some real carnage in the street out here. That's where the bears really do damage inside of the marketplace out there. So that's one thing you're going to be paying attention to, or you should be paying attention to. Inside of the futures contract, you want to be watching this 1763.50 level. That, quite frankly, if we see some intraday bounces into that area and that, in fact, holds, that becomes a nice area for a potential short. Now, however, I qualify that by saying you need to be near your computer out here because we are still inside this 25-point consolidation range. That has not been broken. However, if you see a close below 1763.50, folks, that is bearish. I don't care whether in a consolidation range or not out there, and I'm not talking 1763. That's, you got to give it a little bit of room out here. If you do break the consolidation box at 1748, that's as a minimum of 25 points to the downside out there. However, if we go just simply take a look at normal moves out here, we go from low to high out here, what we'll see is that a normal move takes you back to 1693. We're at 1759. It was at 1774, excuse me, earlier. So that is about an 80-point move or so off of the highs from this morning. That is a normal move, 1693. You break the consolidation range, and that's probably what it is communicating to us. And that is a close below the 1748 level. So you want to be paying attention to that as well. The other thing you want to be paying attention to, that is our Tiger Dollar promotion. This is the last time of the year that we're doing it. It's going to expire next Sunday. I know it seems like it's early in the holiday season, but I can guarantee you someone is going to ask you, is going to say, Dad or Mom, what can I get you? Or, honey, what can I get you? What do you want for the holiday season? And instead of a pair of socks or something that maybe is even less useless than a pair of socks, tell them you want Tiger Dollars. That's what you want. Have them invest in you. That'll be a great thing. Remember, you can use those Tiger Dollars for Basil's upcoming workshop. That is going to be tomorrow. Folks, have a nice Twitter Thursday. Look forward to seeing you tomorrow morning. Take care.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.